What's going on, everybody? Keith Allen from Material Indicators, getting ready to do a quick analysis and tutorial on analyzing Bitcoin trends with FireCharts and CVD. We're going to be using our FireCharts order book and order flow data to try and identify the trends, both long-term and short-term. If you can join us live, glad to have you with us. And I will be fielding some questions throughout this, throughout the tutorial, throughout the analysis. Before we get started, of course, as always, I am not a financial advisor. Material Indicators does not provide financial advice of any way, shape, or form. Please do your own research, do your diligence. Trading is risky, and you should seek the advice of a licensed financial advisor for those tough decisions. If you like the content, please do me a favor, comment, like, subscribe, share it with your friends. We are growing, rapidly growing this little company of ours, and we're really excited to have a phenomenal community joining us on Twitter and on Telegram. Really a fantastic trading community. We welcome you to join us. It's absolutely free to do so. And of course, it's also a great learning environment there. So welcome you to come in and check it out, and you can see some of the tools that we're using. If you have questions, of course, you can post them in YouTube or on Telegram. Actually, probably YouTube and Periscope is best. But if I miss your questions, I will be back in the chat regularly on Telegram, and we'll field them there. Hope you will come join us and follow us on Twitter at MI_algos. And of course, you can learn more about our products and what we do at materialindicators.com. So let's go ahead and climb into this thing and go through quick an analysis of what FireCharts and CVD are. Really what this, we're going to be very focused on the CVD here portion of it, because I've had a lot of people talking in the chat about things that they see, and some have it figured out and some don't. So I want to make sure that you guys understand what you're seeing and how you're interpreting the data in the CVD, so that you're making well-informed decisions. All right. Hey, how you doing again? Again, Keith Allen from Material Indicators. And today we are going to be talking about our FireCharts CVD, and what is unique about our CVD, as you can see up here with all these colors, is it's binned. So there's a lot of different things that you can interpret out of that data. First question, though, and it's actually a pretty common one. So we're going to start with the very, very basics here, is what is CVD? Well, CVD is an acronym for cumulative volume delta, and it represents the order flow of market orders, not limit orders, strictly market orders. And when we see the CVD going up, that represents market buying. When we see the CVD going down, that represents market selling. Pretty simple there. Binning breaks up the CVD into order classes so we can easily identify whale activity. And that's something unique to Material Indicators. I don't know anybody else who does it the way that we do. And we will dive into what each of these classes means here. But you can see the key. For those of you who subscribe to the chart, you can see the key at the bottom of what each color represents. Brown being the mega whales, purple being the whales, red sharks, and on down to these yellow or orange orders that are the smallest in the class. Historically, sharks, the red orders, have dominated Bitcoin's order flow, but whales, the purple orders, have dominated the price. And you can see that by looking at the shape here. Look, this is the order flow, and this is the price up here. Purple matches the price better than red does, but red is dominating the market orders here. And we'll climb into that and explain what that means and why it might be happening here in just a bit. This was very unique here. After the COVID crash, things kind of changed in March 2020. And that would be this little dip right here, actually a big dip right here. And notice what happened, right? All of a sudden, there was accumulation, and then everything started to dump, even though price was going up. Well, why was that? Well, these market sell orders have dominated the CVD since that point, and there are plenty of good reasons for that. Number one, maybe simply profit taking, right? We saw price action moving up. Bitcoin hit all-time high after all-time high, and people were taking profits, especially those that were accumulating early on. The other theory I have is that in a market order situation, right? Market order is not ideal for getting the best price, whether you're buying or selling. Market ordering is not ideal because of slippage, right? If your order is larger than the liquidity that is above or below your order, depending on if you're buying or selling, you could crash through that price. So you're essentially not going to be buying or selling at the price that you're hoping, if there's a liquidity or an illiquidity issue. So typically, people don't, at least whales don't typically panic buy, right? But a lot of people, a lot of order classes from retail all the way on up will panic sell if they expect some movement. So part of my theory is that we're seeing a lot of selling at this time. Let's see if I can see it again. We're seeing a lot of selling at this point. Part of it is, of course, profit taking, but part of it at this point, after we get to the downside, and we'll get into a live chart here after this and analyze it deeper, is likely panic selling along with that. So a couple of things that I think are interesting. We're just talking about mega whales and why do they place market orders sometimes and not others? Well, I have a pretty simple theory. Obviously, there are occasions where there might be a panic sell. But I think more often than not, and this is, okay, so this is speculative, take it for what it's worth. They're trying to flash to the market their intention. Okay. They want you to follow their lead. They want bots to follow their lead. Now, and again, we'll look at a live chart here in a second, but you'll notice a divergence sometimes and quite frequently between what brown mega whales are doing and what purple whales are doing and what those yellow bots are doing. And again, remember, purple dominates the price class. At least they have so far with Bitcoin. Not the case with every coin. You look at some shit coins and you'll never see a mega whale, just because they don't trade those illiquid, low liquidity coins nearly as much. So let's open a chart, and I'm going to share a chart and see if we can get a better handle on what this really means. And for those of you who are members of Material Indicators or subscribers, you obviously know what this is. For those who are not, I'll give you a quick rundown, but there's lots of tutorials on YouTube and on our website that can help you out. This is our FireCharts web app, our first version. We've got we're going to have a new version coming out very soon. But the top half is the order book. It's a thermal map, strictly at this point of all BTC pairs and all USDT pairs on Binance. And the bottom here is the order flow. This is market orders, buying and selling. Again, up means buying, down means selling. So as we look at the binned classes that I was speaking of a few minutes ago, what you can see here is we have this divided into 1, 2, 3, 4, like multiple classes here, 5 or 6 classes. And of course, the blue being the cumulative of all orders. Okay. So first, let's just knock out all the other classes and take a look at what the blue class is doing. Blue is cumulative of all orders. All right. And this is a daily chart. We could take this to a 3-year chart and see what that looks like. Now, I was talking at the top of this thing of what was happening here after the COVID crash right here. And you can see, like on a dime, the market changed here. Early on, we assumed that these yellow orders were retail, and it kind of followed the path of price. Logically, that seemed to make sense at the time early on. But when we started seeing some contrast to what the whales were doing, and we started seeing what seemed to be like some very sophisticated trading, especially right after the COVID crash. This is the COVID crash right here. Okay. That's there you go. Look, that's March 9th. So we're right in this range here. This was the COVID crash 2020. And look what happened. All of a sudden, there was accumulation here. That accumulation actually started to trickle down here on this shark class, which would be $10,000 to $100,000 orders, by the way. You can see how the classes are bent here at the bottom. Yellow, $100 to $1,000 orders. Initially, we thought that was retail. Obviously, there's retail in there. But now it's pretty strong consensus among our community that these are bots, largely dominated by bots. And again, at this point, we saw a major amount of flow going out, right? And so, what did that mean? Was it panic selling? Was it market selling? Well, it wouldn't make sense for it to be market selling while price is appreciating so very, very high, right? So this was likely profit taking, or perhaps Fred actually has a theory that this may somehow be related to reserves on the exchange. Is it wash trading? I don't know, and I can't make that presumption based on the data that I see. At least I can't make that connection at this point. But whatever it is, it's pretty significant volume, and it has been for the most part contrarian to what whales are doing, especially what mega whales are doing. And mega whales being the brown class of $1 million to $10 million orders. So this is the 3-year view again, and we're looking at it normalized, which makes it easier to see the moves. And let's just look at the actual value and see if we can garner anything different at that point. So when we look at actual price, and I'm going to just extend this a little bit to make it easier to see. All right, we're looking at roughly $4.5 billion in accumulation just on CVD, right? So just on market orders. That's not limit orders, just on market orders, about $4.5 billion on market orders. And then now, obviously, they have dumped, 3 times that much almost. Okay. So, and how could they do that? Well, they did that because they made a lot of money. That's how they did that. So things are not always what they seem. I hear often in our chat, somebody say that whales just unloaded everything. Well, the CVD is relative to the time frame that you're looking in. So it starts at a baseline of 0. So on that 3-year chart, we were looking at 4.5 billion. But that changes when we get to a 1-year chart, right? Not nearly the same. And of course, this is all part of the selling at that point. And this is so this is not indicative. We're still on the actual price now. This is not necessarily indicative of what the market is doing, because look, we saw all this market selling going down while the price was going up. So this is actually a lot of it is profit taking. Sure, there's panic selling on these dumps, absolutely, but a lot of it I think would be considered profit taking. But look who's flinched the least out of this. The purple and brown whales, the whales and mega whales, as we like to call them. And if you're new to the community, the mega whales are the brown class that we identify as $1 million to $10 million in their order sizes. The purple whales, which seem to dominate this class, or at least dominate this coin pair, are $100,000 to $1 million orders. So as we analyze what they have been doing, they haven't actually sold that much comparatively, right? So in the beginning, I was talking about how or why, and I'm going to normalize this again to make it easier to identify. Why would mega whales or whales market order and risk all that slippage? Well, I think the simple theory is they want to show the rest of the market what they want you to do. Okay. And I'm going to go to the day chart, which makes it very clear and easy to see what's happening just for today, for example, right? So look at these moves right here. And I'm gonna go ahead and hide the other classes so we can make it a little bit easier to see. It's one of the cool things I love about the CVD in here is that we can isolate any specific class and see what it's actually doing. So look what happened here. We saw a market order from a brown mega whale right about this range, and it didn't really move the needle much. And by the way, you can manipulate this chart if you're really trying to, at the moment we don't have crosshairs running top and bottom. Wasn't able to do that in this version, and we just refreshed, so I got to hide those again. But a way to identify, try and line up the moves is to simply scroll the chart, right? And you can see, let's see exactly what was happening at that time, right? So here's that first move. Look where price is, right around 33, 400. And what happened? It barely moved the needle, right? Barely went up. And then purple whales also bought in here, and that should move things up. Well, we got a little blip out of that, but not enough. Now, why? What is all this liquidity coming in here? I'm gonna hide this price tool so it's easier to see what's happening here. Why is this happening? And why is price in this sideways chop for so long? So again, if you're new to FireCharts, this is a heat map. The liquidity is basically scaled in this color range, and that range is relative to whatever's on the map. So and you can see exactly what it is by hovering the price tool. That's 13 million in this range at 32. I want to show you something on a longer term view, so we can kind of get a feel for what this liquidity game is that seems to be happening with all these massive orders that we see laddered up and down, right? So look at this. This is up here at 40,000. We have about $15 million. These rungs are all about 5 million, 6 million. There's another 13, 14 million. And look what's happening down here. They are stacked. Now, this is not your neighbor. Well, it depends on who your neighbor is, but this is not likely your neighbor laddering 10, 15, 20 million at a rung. I have a theory that these are large institutions who are laddering these orders like this, trying to get filled here. So let me speak to that narrative here in a second and unshare this screen and show you some static charts that give us a chance to kind of analyze a little different time frame. Our static charts, the ones that you see on Twitter and the ones that we post in the community regularly, cover a week. Okay, and this I have to go back and check the dates, but just by looking at it, this looks like this may have been around the time that Michael Saylor filled his 400 plus million in orders. So look at all this liquidity sitting here. Normally we would see this and go, oh yeah, that's going to hold. Price is going to bounce from there. But it didn't, did it? It came down and it kept coming down. And look at all this here. This is hundreds of millions of dollars. And it just absorbed it all, right? Now, did it really absorb it all? Or did it break up? Well, I had looked at it at the time, and some of it was absorbed, some of it was moved down and scaled down. And so that's kind of the game. But look how it's being played from both sides. Okay. So if somebody has hundreds of millions of dollars to spread here in this range, chances are they have a few more to spread up here, right? And so when they're not getting filled, my theory is, and again, this is my speculative opinion, You make yours. I'm just going to show you what I see, and you interpret it as you wish. My theory is that we see these when they're not getting filled where they want to get filled, they start applying the pressure from above, right? And if that's not working, they apply more pressure. And I look to see where orders stop and start. And when they're all lined up in a row, that to me is a pretty good indication that it's likely the same actor. Okay. So in this instance here, we saw more liquidity coming in above to push price down. And they don't necessarily want to get filled up here, right? I mean, they'll take the scalp, they'll take the profits, but they would rather. And what they end up doing, and you'll see this on the daily chart much more clearly, they start breaking this up, right? Instead of having $10 million walls or $20 million walls or $40 million walls, they'll start lobbing down blocks of 1 million, 2 million, 4 million, 5 million to push the price down into their liquidity so they get filled. Okay. So that's essentially how this got filled. And look, you can see it happening. You see the brighter colors here. And you also saw them having to move up here, right? So they're having to play it from both sides, and they're trying to pinch it in the middle to get filled the way that they want. So look what happened here. Starts to break up. And here comes another ladder here. So maybe they got completely filled. I can't tell off of this chart, but likely what happened, because you see a clean end and a clean start here, is a lot of this got filled, and this became another ladder, the next rung, the next section down where they wanted to get filled. And look what happened, right? Price started to move back up. So what they do? They added some heat right here to push it back down, and they got filled. Same thing. Price starts to move up. Add some heat, push it back down, right back into your ladder, and get filled. Okay, you see this area right here, these clusters, these are blocks just getting lobbed down, trying to push price down without sacrificing all their liquidity up here, without market ordering this, this $10 million right here. They're just pushing blocks down, push it down, and get filled. And it happened again. Okay. And then that event was done, and we saw price come back up. But look at this. Here's another fat ladder here. And you can see here is another start and finish line. And what happens when price starts to move up? They start bringing it down from here. Look, let's just break this one up, move it down, and push price down again. So this was the week of June 11th, it looks like. Let's see what the following week looked like. All right. So this is what happened earlier in the week. This was that big fat order I talked about. And you can see this, right? So look what's happening though. They're having to break up the orders. And when it comes into their region, they're fat here. They're hopeful they're going to get filled all the way down. When it's not happening, right? When it's not happening, what happens is they start breaking up the orders, adjusting upwards because they want to get filled. Again, my theory is that these are institutional players with these big fat ladders, and they intend to get filled down here. They may not necessarily intend to get filled up here, right? They're just trying to put the pressure on down low. So let's take it another week closer. This is actually through to today. So this is very interesting because this is our current situation, right? This is our current week, and look what's happening here. Okay, so we were heavy here. A lot of this got filled, and some got laddered down into a new range, hoping, these guys are hoping for the 25 to 30 range. And a lot of us are hoping that 28 range holds, right? We hit that range. Was it the week prior that we dipped down in there? Yeah, right here, right? So a lot of people, bulls are hoping this holds. Bears, not so much. So look what's happening here, right? So this was a fat, very bright spot. Price went up. They started moving, breaking up their orders, moving up to get filled. Price goes up here. They add resistance here to influence price direction, and they add layers, laddering up to make sure that they're basically scaring the market back down so that they can get filled. All right. They get down closer to the range. Suddenly they're loading up, orders here again, hoping to get filled. Doesn't happen. So what happens? They start breaking it up and they start getting filled at a different price range. That's good for bulls, right? Because it's keeping price off of that bottom or that last local bottom at like around 28.8, I think it was 28.6, something like that. So as the week went on, we actually see this area thinning out a little bit. Why is that happening? Well, look right here. It's very clear. They've had to adjust, break up these orders, adjust and move up and come meet price. Now, how come we can't get to 37 or even this 40 range? 40 has been a hot spot for a long time. Well, the reason we can't get there is because they're layering tens of millions of dollars up here to keep price down. And they're going to keep throwing chunks down to try and push price until they get filled. Are they going to get filled in this 25 to 30 range? Don't know. So far, they're having a hard time. So they're bumping their orders up into this range that we're trading right now. We've been chopping through 32, 33 for quite some time. So let's go ahead and climb back into a chart and see if we can get a little more granular with what we're looking at and maybe even figure out what we can expect through the weekend. So again, we see these blocks, right? This is what I was talking about a little bit earlier, and I'm going to move the chart a little bit so we can see what's happening. This is very clear, right? This is a start and stop. This in my mind is one actor. Let me move that tag away so we can see. This in my mind is one actor. And look, you see this little piece right here? Look how that fits like a perfect little Tetris puzzle. So likely they saw price coming down. They put this order in. They put one down, some plunge protection down here. Let's see how much it was. Let's put another 10 million down there just in case. And they didn't get filled. Okay. So now what happens? They start breaking it up. Move it up here. Okay. Here's a $12 million chunk. Didn't happen. Okay. So now let's go up here. Let's make it 17 million. Still didn't happen. Then what happens? They start picking it up. And they're now using smaller pieces because the price isn't where they wanted it. But it looks like they broke this order up, at least one rung of it, to start to get some of it filled. And look what's happening from above. Price starts moving up. Nope. We want to push it back down because we're trying to get back into our range. Now, I have no way of knowing for sure if this actor is related to this actor. But we do often see situations where you'll look at these ladders, for example, right here in both directions. And quite often, certainly not always, but quite often, once these guys get filled and price starts to move back up, these will start to clear out. And that to me indicates that that's the same actor. Doesn't always happen. Not exactly the most kosher way to play the game, but it's the game that these whales are playing, and it's one that you should be in tune to. It's tough to beat them, but if you know the game, it's much easier to play the game. Simple enough. So I talked about looking at the trend, the long-term trend versus a short-term trend on CVD to see if we can figure out what's truly happening. And as we looked at the 3-year, I think it was pretty clear that the COVID crash in March of 2020 was a very pivotal point for the entire crypto market. Okay, but it's also when the bull run really fired off. So you can see again how purple dominated the class in terms of price action, but didn't always coincide with brown. And so when you're seeing some of these moves and wondering how to react to them, I mean, the first thing you have to understand is mega whales and whales are scalpers too, right? It's not, this isn't necessarily, and especially when we're talking about market orders, these aren't their investment long-term hodl positions. Okay. I would say that those are more than likely the limit orders that we're seeing in the heat map. Okay. So these are day traders and scalpers, just like many of you watching this video. But it's very clear as we zoom in that at this stage, a lot of selling still going on. This yellow class is buying. Again, it is thought that this is bots and that they're counter trading the market. Actually, more specifically, counter trading whales and mega whales. And a couple of theories on that might be maybe it's the same actors and they're providing liquidity. But there's a strong feeling that this is connected in some way to reserves on the exchange. So just consider that when you're looking at these. I promise you, this is not dominated by retail at this point. So, always good to zoom out to get that perspective. And right now, it's difficult to get a perspective on where the trend is because it seems like we're in this pivotal point. But if you look at it, it just seems like it's still in a downtrend. Not calling the bull market over, even though we have lots of bear signs. There still needs to be, in my opinion, anyways, some confirmation, or at least another confirmation, likely breaking our last low, and closing there would probably do it for me. But again, the trend continues. And has continued. This is where things started to change. Okay. This is, in my mind, this is where things really started to change for the market and the whales. Okay. This was when Bitcoin started getting toppy, right? In this 55 to 64 range, almost 65 range. And the whales started selling. So again, let me clear out some of the other classes so it's easier to see what's happening. This is where purple whales that dominate the price first started profit taking. They started getting out right here. Meanwhile, brown megas haven't always been in step. When they are in step, we usually see a bigger move, but the brown mega whales have not always been in step with the purple whales. So we saw a sell-off here. We saw a sell-off here. We saw a sell-off from purple. Meanwhile, brown was still buying. And then at the very top, looks like the purple whales were very in tune to that move, right? Look, boom, there it is. They already started selling. And the brown megas, they stayed buying. They stayed buying, still buying. And now they said, oh shit, looks like the bottom is dropping out. And when they sold there, that's when the cascade really started. So that's how things unfolded. And I hope that by looking at this and seeing this, you get a better idea of how these different classes are influencing the price and how the market is responding to them. So I'm going to just keep kind of tapering in, narrowing in to try and get a feel for what's happening, because there were a couple of points where it felt like Bitcoin might bounce and the market would turn. And this is where we start seeing, especially the brown mega whales, flash signs that they want the market to follow. Okay. So, and for me, knowing that purple always, or at least historically, has dominated the price action on this particular coin pair, that's the one I've been watching most closely. Okay, the purple never bought in with any real conviction at that point. Sure, there were some scalps, but they never bought in with any real conviction at that point, and certainly not in concert with the brown mega whales. So you see these moves here, and this is, in my opinion, simply brown megas scalping, making a buck, and trying to get the market to follow their lead. Purple didn't take the bait, and neither did I. So that was that's a 12-week view. Let's now look at the 1-week view. All right, getting very choppy in here, right? We're in this sideways chop right now. And we can see all this liquidity lying below that intends to get filled. Whether they get filled here or whether they got to do this move and bring it up to get filled remains to be seen. And I want to actually show you, while I have it open, I want to show you, while we're talking about that, I want to show you what I mean. You guys will hear me talk in the community a lot about seeing organic liquidity versus this big institutional money. Okay. Again, in my speculative opinion, these giant buy walls and sell walls are likely institutional players. Okay. It's just too much money. And when they're all stacked up together, in sync, they start and stop at the same time. It's pretty evident it's the same player. But when we start seeing, and let me see if I can zoom in a little bit. It's not as evident in this chart as it was in some of the others. But when we start seeing some of this other liquidity come in, that's not as pronounced and defined as these huge rungs here. Gosh, we had a good example of it last weekend when we came off that bounce. And I think that definitely helped. But essentially, what needs to happen for the market to really run. Okay, look, here's another rung that just came down. Trying to push price back down to get filled down here. Let's see if we can let's see if that came from up above or if somebody just put that in. Okay, it's hard to tell, and I'm on my tiny screen here doing this right now. It's hard to tell. I can't see definitively that it came from the ladder up above. Each one of these rungs there's 4 million, another 2, another 5, another 5. So you're looking at $20 million roughly, just in this ladder right here. And my guess is that these guys don't really want to get filled up here. This might serve as a scalp for them, and they'll take the profit on it and be very happy with it. But what they would much rather do, in my opinion, is push price back down, and so that they can get filled down here. I think that's the intention. You may have a different take on it. That's simply mine. Real quick, let me check and see if we got any questions in the deal here. Let's see. Crypto. I don't even know how to crypto, and I don't even know how to pronounce your name. But thanks for being here, man. Lucra. Hi. Do you think that the increment of small market sells as the price goes up can be the SL or liquidations of retail? Stop losses are not going to show up on the order book, I don't think, like this, like you would expect, because a lot of stop limit orders don't get triggered until price gets to their range, right? So I think that a lot of these small orders are simply scalps and profit taking, and like I said, some of it might be there to try and push price down. So when a lot of times you'll see them in a row, right? One will go, it'll get filled, and then or not, and then the next one comes down just a little bit further than it. So it could be limit orders of scalps, but a lot of times it's getting broken up from above, from a larger rung above, getting broken up and thrown down to try and push price down and influence the price direction. Alexander, thanks. Appreciate you watching and supporting us. Thank you. Delson, seeing how much those brown whales are still holding seems like a dangerous risk to them dumping on relief bounce up above 40K. So this is maybe a misconception. And let me go to that chart. So as I said before, what you see in the chart is relative to what's actually happening from the time frame that you're in. Okay, so in this case, we're looking at a daily chart, and this is normalized. So we're just looking at relative ranges. Okay, and so starting from zero on the day, there was one purchase, there was another purchase, there was a sell, and then another dump here. Now, to find out exactly how much they actually bought and sold, and remember, each one of these moves, each one of these, let me clear it out so we can just hone in on it. Each one of these is one market order. Okay, it may take, as you know, when you have an order, a lot of times it takes several little fills to get the whole order filled. That would still be classified as one order. Okay, so this is one trader. This is one mega whale placing one market buy, one market buy, one market sell, and another market sell. Doesn't necessarily mean it was the same whale each and every time, but it could have been, and this one especially looks like it could have been because it was a quick scalp and a good one of the same relative size. So let's look now on the actual value of that move and see if we can get anything else out of it. Let's see. So, and I'm going to expand this, make it a little easier to see and identify, right? So, first move came in from zero, right? Nothing to start the day. $1 million. Another million and change. Sold it. Back to $1 million, right? So this may have been the same trader who bought here at, well, this one bought here at roughly, let's see, what time was that? That was at 7:45, and at 7:45, price was right at around 33,280, and then he sold at 8:10, and at 8:10, $33.51. Nice scalp. Probably the same person. Okay, so all right, we were talking about these smaller chunks. Here's a good example of it right here. Look, see this bar of liquidity right here? See how it blanks out? It stops right here. But look, it moved right down here. And then it stopped. Okay, so what happened here? Did he try and get filled down here? Did he drop one down here? Or did he, looks like he decided, had second thoughts and put it back in place? Kind of what it looks like from here. So you never know. But when you see moves that are very calculated looking like this, that just seems like, price was coming up. He put here trying to get filled, either to get filled or to push price down. Whatever the case was, it pushed price down and the fill came in down here. So, and then this move right here, what was this? This was, so price was at, my price tag tool. So that class was up $1 million and then sold. So this is 3 million. Okay. So from here, from 1 million down to minus 2 million, that's a $3 million deficit. So that was a pretty significant market order. That's a $3 million dump right there. But look what happened. Look easier than like me trying to hit it right on the right time. Look what happens. Here's where it was, right at, we'll call it 33.10. He dumps 3 million and price goes up. And he's got to be pissed. And why did price go up? Price went up because I'll show you exactly why price went up. Right at that time, and this is the liquidity game, okay? Right at that time, and I can see other classes doing it too. Let's see if the others were in on it. Let me just hone in on whales. Look, mega whales dump 3 million, but look what happens here. Purple class whales from minus 245 or 250, we'll call it 2.5. Okay, so that's 1.5 million of it right there, bought by whales. And let's see if the other classes were in on absorbing that liquidity. The bots ate it up. Contrarian. These yellow bots have been trading contrarian to mega whales quite frequently as of late. It looks like green bought. It looks like everybody bought. Looks like everybody absorbed that liquidity from that mega whale dump, and that pushed price up. So these institutional guys down below, at least the ones I'm speculating about, didn't like that. They want to get filled down here. So look, what starts happening? More liquidity appears up top. They don't really want to get filled up here. They break off a piece, they push it down. And look, tip to tail right here. Look, not filled here. Okay, let's push it down. They push it down here. Not filled here. Okay, let's push it down. They push it down here. Not filled here. Look, boom. They're just stair-stepping down. Stair-stepping their way, and price ultimately hits an order to get filled. Don't know for sure if this is the same person, but they're pretty well aligned, whether it is or not. Okay, same situation here. Now, if this person wants to get filled, if they want to get filled at 34, if they have an ask at 34, and their real intention is to make money, why in the hell would they start pushing price down? Why would they move their bid down? They're moving their bid down because what they really want to do, in my opinion, is push price down to here. Okay, that's my theory. Now, in this situation, here's one that's a little bit different. Okay, so it looks like this actor shifted their bid and shifted again down here. So this one could get filled, and if it does, it looks like they actually split it up. So this is a split order. They put, this was at this point about 5 million, and it looks like 3.5 went here. It looks like they added up here. This was a 4.5, and they added another million. So look, there it is. They split it up into. You got to do some forensics in here, friends. Okay, they split the. I'll zoom in so you can see it better. Look. So liquidity, break it up, and send some down. Okay, stack it down here. Not getting filled. Stack it down here. Look, a ladder down here. Boom. There's a little bit gets filled. Oh, we're getting filled. Now let's get back up because we don't really want to sell at this price. We really want to buy down here. And so boom, boom, laddered up. Okay. They took it in both directions. This is to push it down. And in case in case it breaks through, they're taking it in the opposite direction. Okay. So they can at least take some profit on this scalp. Their real intention is not to scalp this. In my opinion, the real intention is to push price down here. So I hope that gives you guys a good idea of what you can do with CVD and FireCharts together, and how you can use these tools to validate, some of your decisions with whatever it is that you use to trade with. Personally, I don't like one single tool. We have a suite of great tools, and I personally like to use them in conjunction with each other. Let's see. Lucra, stop loss or market, a lot of leverage, FOMO, and fast liquidations. Delson says, I was thinking about the high time frame chart that showed the all-time high where the purple whales sold off, but it looked like the brown whales are still holding coins they bought at the top. They very well may be. Let's look at that again real quick, okay? On the high time frame chart, let's go to we can see that in the 1 year even. And I'm going to go to, actually, let's do this. Let's look and see exactly what they sold. Okay, what they bought and what they sold. Let's look at the brown. Let's look just at that brown class and see exactly what they did throughout the last 3 years. Okay, brown whales have not really sold much of what they accumulated over time. Let's really make this easier to see. So ultimately, it looks like 400 million, little over 400 million was bought, and they only sold 100 million. Okay, in that particular class. Now, why would that be? As I mentioned at the top of the show, or at the top of the video, there are liquidity concerns when you're dealing with orders of that size. Okay, so when the order book gets thin, and there are many times that we have seen the order book looks thin, that you can't drop that much liquidity on the market without your price punching through. Okay, so what do? You don't really think that these guys are holding all through this, do you? Some of it they might be holding because they're dollar cost averaging their positions in from here and well beyond there before we ever even got to the $10,000 range. But what mega whales can do that no other class can do is they can break up their orders into any other size order. Okay. Sharks can't disguise themselves as whales, but mega whales can disguise themselves as any other class. And look, maybe they broke up those $10 million orders into a bunch of $1 million orders or $100,000 orders, or maybe they even went smaller than that. Okay. These guys in this class, like I said, red dominated the actual CVD. Let's look at that again. Red compared to the shape of the CVD. What does that mean? It means the average market order fell within that range of $10,000 to $100,000 orders. Okay, think about the way you trade. When you buy a position, especially if you're scalping, okay, we all may dollar cost average our way into a position. But when you sell, especially, do you sell as one order, or do you split your order up into different levels so you have split take profits? Okay, if you buy $1,000 worth and you sell in $250 chunks at 4 different levels, then you can obviously understand how a whale who's buying $1 million or $10 million, $1 million to $10 million worth, can certainly break it up into smaller orders and do the same thing that you do. So not likely that whales actually held everything that they bought, that mega whales held everything they bought in terms of market orders. More likely that they broke them up. They saved some as long-term investments. Absolutely. I would stand to think that class in particular is investing more so than trading. But what we're seeing in this market buying and selling activity on the CVD is more trading than you know, than those longer term positions. I think, at least in the short term, anyways. But the long term gives you a good perspective of what the market sentiment is and what the trend is. So I was asked, can we identify the trend now based on CVD? Well, what we can identify is that sure, we see these upticks, but we haven't seen the recovery. We haven't seen a confirmation that the bull market is still in. We haven't seen a real rally that takes us past 40 grand. And I don't think we're going to see it personally. And again, this is just my opinion. I don't think we're going to see it until more of this gets filled. Okay. And to be honest, we're not seeing a bunch of liquidity below 20,000 at this point. So this is where, at least in this range, this is where the sentiment seems to be. And I'm hearing all sorts of, crypto Twitter shit about, different levels. Don't know, don't care. Can only trade what's in front of me right now based on the data and the tools that I have in front of me and the price action that's in front of me right now. And what I see in this order book is hundreds of millions of dollars of what I assume to be institutional money. Obviously, there's some retail money in there as well, but these big walls, I think, are largely institutional players. These guys intend to get filled, and whether they get filled at 26 or 36 remains to be seen. Okay, this is where we're pinned right now, and I think that these guys up here are going to hold us to this range until one of two things happens. They get filled down here, or we get some more organic liquidity, meaning more market activity, retail and otherwise, that starts pushing price back up here. In other words, these guys got to get front run. And we saw it happen a week ago, roughly a week ago. And it could certainly happen again, but it just hasn't happened with enough momentum to really push price past this level. So that's what needs to happen, in my opinion. We got to see some more of this kind of like, it almost looks like a cloud of activity. See if I can identify anything in here that actually looks that way. More of this kind of looking stuff. Filling in these gaps and coming in above these ladders, either that or another institutional player, another big monster whale coming in and front running this down here. Until then, I think that these giant institutions are playing it from both sides. They're using their weight, they're using their liquidity, their bankroll to push price down to get filled down here. Once they get filled down here, guess what? They want to make money too. They want to see the market go up. So that's my that's my analysis. I wish I could say that things have turned around so far. They haven't. But you know how this market works. It can all happen in an instant. So if you have any other questions, yes, Lucra, a whale can also buy brown and then sell yellow. And hey, maybe they are controlling some of those bots, which would speak to that. Anything is possible. But one thing is also true. Yellow retail can't disguise themselves as sharks and whales. They just don't have the resources to do it. So I hope this was helpful for you. If you have additional questions or want to learn more about the tools, you can find me pretty much every single day and night in our community on Telegram. We've got a fantastic group over there. If you haven't done so yet, I hope you will come check us out. It's free to join. and it's really a good place to learn. We got a good learning environment over there. If you would like to do so, here's the link to get into our Telegram community. If you can't remember that, just go to Twitter at mi_algos, and there's a link there in the profile. If you like the content, please do me a favor, comment, like, subscribe, and share it with your friends. And of course, another reminder that nothing I have said, done, or even suggested should be considered financial advice. I'm not a financial advisor. Nothing we say or do with material indicators should be considered financial advice. Thanks again for joining me. My name's Keith Allen. I hope you got a little something out of this video, and I hope you'll come join us in the community on Telegram. Trade safe and trade smarter, everybody. Have a great weekend.